Good day to you, Travis. Today is August 19th and Tuesday. And yesterday I talked about some big market movers coming out today. And as far as financial reports, when they hit the market, typically the bonds, mortgage-backed securities, or stocks will react either positively or negatively. And fortunately, I mean, had this number came out without other inflationary pressures or things to negate this report, we could have seen a really ugly jump in mortgage rates today. What happened was the PPI, which is a producer price index, came out at 1.2 for the month of July, which is just an incredibly hot number, because typically the Feds do not like to see that number higher than 2% year over year for the entire year. So when you have 1.2 in 1 month, I mean, that's amazing. Year over year from July of last year, we're at 9.8, which is nearly 10%, obviously. But like I said, the Feds don't like to see that number above 2. So when you're that hot, it's just amazing that we don't see a bigger reaction in the market right now. The main reason the market's not reacting greater is because they kind of priced it in. They anticipated this number being hot, and two, oil prices have really dropped in the last about 5 or 6 weeks. It was all the way to $147 a barrel about 6 weeks ago. It was down to $112.96 yesterday, but it gained a few dollars today. But even with that, you've seen the big difference in the cost of filling up your gas tank. So because of that, the traders are speculating that next month's number will be much cooler for the PPI because of the decrease in oil prices. So I think that's really why we haven't seen a big jump in mortgage rates today. The other reason is housing starts or permits are low, a 26-year low for new single-family housing permits. So builders aren't building right now, and which is, we can assume with how things are going, it's going to help with inventory. So if builders aren't building new homes and there's a reduction in new housing permits and home starts, then it'll cause an inventory that's on the market now to be absorbed and finally get things some fluid and liquidity in our market. So that's great news. Also, we're at AIG, a big insurance company, as I'm sure you've heard of them. They got downgraded in value today, so the stock saw a big loss today, 130 points in the Dow. And also, Lehman Brothers are speaking of a $4 billion write-down. So a few things there. Also, we're balancing off this 50-day moving average for mortgage-backed securities. Like I talked about before, there's a ceiling of resistance and a floor of support typically in the market. And right now we're bouncing off this 50-day moving average, which is basically a 50-day average of mortgage rates and where they've peaked out. And so we keep bouncing off the ceiling and bouncing down. Unless we get a really big market mover to help us bust through that ceiling of resistance, we're probably going to hover in this range, in that 6.375 range, or about 6.5% on an APR on a 30-year fixed. So a lot of stuff going on there. Other than that, I think that's about it for today. Wednesday, not much on the market for news as far as economic reports. Thursday's a big market mover too. But right now, everything's kind of priced in, so I don't expect any big jumps in mortgage rates. I would just float for now. I wouldn't have a bias to lock at this point. So that's the update for today. Hopefully that was helpful to you, and I look forward to serving you and getting back with you tomorrow. So have a great day and be blessed.